Hey guys, Mike here. So, oh boy, and I think it deserves another oh boy. I mean, what a rip your face off rally. I mean, just tore it right off, right? And I mean, isn't it amazing? Right? What did we talk about yesterday? If CPI comes in line and today was a smidge better, what was going to happen to the dollar, what was going to happen to yields, and what was going to happen to stocks, right? And this is a jam-packed video. If you want to learn something, you watch the video. If you don't, I take no offense. You can click off right now. It's okay. If you give me a thumbs up before you click off, that'd be great. Just kidding. But seriously, you can click off because this video, these are today's like today, is where one, you like looking at your portfolio, and two, you get to learn something. Take a step back. Okay, these ain't the kind of days to be chasing. All right, these are the days you take something off and just take a step back for a minute. All right, because again, I'll say right out the gates before I get into any of this. When you look at those charts, ain't nobody in their right mind can go, man, that thing is stretched, right? I mean, stock markets don't go straight up. And no point in time in October 2022, when we said we bottomed or whatever, we said they bottomed, it didn't go straight up then. It said it bottomed in January, it didn't go straight up. Like at some point in time, you got to get a breather, start to take profits, come down with some liquidity, all that good stuff. And today we'll talk about what all today was, what all it entailed, and why you saw certain things up that, you're going to be surprised. I tell you, I want you to think about this while I go through some of this. If you could tell me what do you think the top performing sector was? Do you think, in the comments, don't cheat, do you think technology or the Mag 7 were in the top 3 performing sectors? The Mag 7 is not a sector, I know, but I made it a sector because it's the whole freaking stock market for the last year and a half, okay? And so do you think they were in the top 3? And I want you to put in the comments, right, while I go through this stuff. And trust me, you're going to learn something here. Now, what obviously fire and brimstone this rally right out the gates? CPI, what happened to the dollar? We talked about it. It tanked. Boom. Went down immediately. 10-year yield. Boom. Tanked. What happened to the 2-year? Boom. Tanked. 30-year, not even going to put it in for you because it's useless. And if you're honest, look at this. Real estate. Look at this. Utilities. Discretionary. All these things. Where do you see tech, which is XLK? Not even in the picture. Not even in the top 5. Right, and literally look at real estate and these other sectors. These are sectors, not stocks. When you see them up this much, that is a rip your face off rally. I put the Mag 7 in here, which is this one right here, for a reason. Look at that. Some of these are double what the Mag 7 were today. If you didn't notice, Tesla was killing it. The rest of them were up pretty good. We've seen them way better, right? Oh, where's that? Okay, not there either. Look at that one. There it is, up 2%, which is very respectable. Very respectable. But you would have thought like a day like today, you say, oh, no, what was up? It was interest rate, or more importantly, yield sensitive type of areas that also have been just absolutely beat down. And by the way, if you're a member or becoming a member, the first video I want you to watch, the one I put out today, it is right there. Okay, you can see the title, the rate hiking cycle and the X factor during the Fed pause that causes rallies. It took me a while to figure out the X factor. I finally figured it out. So if you join or if you're in there, make sure you go into the Discord, and I put it on Patreon too. Watch that. That is one of the most important videos you will ever watch going forward for your investing portfolio or even trading for that matter. So make sure you look at that. Now, what has caused this, right? Let's take a little trip here and look at this. Remember I told you right there, in October, beginning of November, CTAs are net short. People are like, I don't understand what CTA is. That's all about futures and all this other stuff. It has nothing to do with the stock market. No, they were net short. Look at this. They still ain't even got back to neutral yet. They're buying heavy, but they ain't even got back to neutral yet. Okay. What do we talk about this one? NAAIM exposure. Okay. How much of these big funds and everything are exposed to stocks? Well, it's down here in the toilet. Look where it's at now. That's a big spike. What does that mean? That means the exposure has picked up quite a bit. It means they've been buying, right? This is big money pushing the market up, right? And I told you, when it gets down in some extreme levels, you can see a pop. Doesn't mean it's the bottom. Just means it's definitely due for a pop, which, of course, we have more than gotten, right? What else we talk about right here? When you start to see, again, track this stuff. Bearish divergence on the RSI. Doesn't mean it always plays out for stocks. Doesn't mean it always plays out for the yields. But I said if this plays out, right, and you look the last time it happened, it is going to be jet fuel for stocks. And that's exactly what's happened. And if this continues to go down like this one did, that's when you had a big rally right there. If that happens, then you can continue to do it. But what does this cause? It takes a combination of things to cause this right here. Look at this. You're talking about 2 months of selling off, right? So 60 days to sit there and be undone, almost completely undone in like 18 days. Like, that's nuts, right? And it's only 1.8% away from taking away 3 months of sell off, which is just crazy. That's what I say. Is this thing overextended? Nobody can look at that chart and go, nah, man, this ain't overextended. Now, does that mean it's got to stop? Absolutely not. But, keep this in mind. And for those who stick to the end, I will have some very important thing that's going to happen tomorrow that you need to be aware of, okay? Now, and before we continue, guys, please hit that like button there at the bottom. Give it a thumbs up. Helps people find the video. And if you like this kind of content, think about subscribing. I appreciate all you guys' support. That somebody just put in our Discord, and I believe it's true, that the House just passed a bill to keep the government going. Not that a shutdown would have done anything to the market, but you never know. It would have been something else and a reason to take profits and all that stuff very heavily. But now it's going to the Senate supposedly for a vote tomorrow. Most likely they'll pass it, right? Which could also, maybe, we'll see. And this is one thing we got to watch out for. Watch out for some crazy rating agency coming out and going, we're going to downgrade you guys, right? I mean, wouldn't that be, just the thing to put the brakes on for a second to use as an excuse to finally sell off and get wherever the hell. I mean, I guess you can call that a lower high, I guess, or a higher. Why do I say that? Higher and low. Excuse me. Jesus, I don't know why we say that. Maybe that's what that is, and that big gap right there just created. But yes, at some point in time, trading sideways, consolidating. Yes, that is normal stuff, especially when moves like this. But there's just a lot of money pouring in, and the thing you got to watch for is this right here. All these beaten down stocks, right, that are in the dumpster. And I said this in Saturday's video. When somebody asked about IWM and some other stuff, I said, you got to have big money come in. Doesn't matter what retail's doing, okay? You got to have big money come in. When that finally happens, and you would think things are so bearish at this point in time for some of these sectors, that big money would finally come in, which seems to be happening today for sure. But this right here is all that tech that has just been shorted to death. I mean, look at that drawdown. That is insane. And you don't see any move up like you do with the Magnificent Seven other stocks, right? Well, those stocks had good days today, right? And it's no surprise that the IWM had its third best day in the last 4 years. That right there is today. That right there goes all the way back to November 2022 right there, the second one over. And then the third one goes all the way back to 2020 where it had a really good move up right there. So it's no surprise because why? Small caps are the most rate sensitive, right? And that's what we're talking about. As long as rates just stay high, and I'm talking about like the yields and things, right? Because they have to issue a lot of debt, take a lot of debt out to keep them going, especially micro caps and everything. And that's why it's been just hammered with no love, and all the money has been flowing into the Mag 7, not this one, right? And you can see, I mean, that's a huge move up. That's an enormous move up. I mean, it was over 5% for an index. That's insane. Right, got above that trend line. There it is in that volume gap. That's how IWM moves, right? It stopped right at the top of the resistance area right there, kind of setting itself up. And you can see, though, when we look at it, I mean, a lot of gaps above it, but you can see on those tree branches on the volume profile, that is your resistance. That's your targets right there, 184, 194, and we won't even talk about that. That's 214, but that's way up there. But you got a lot of gaps to fill on the way up as well. There'll be magnets, but, you got moving averages, too. There's a 200. It hadn't sniffed it in a long time, but it has been resistance before. It's been support. So it makes sense to fill that gap. If this thing keeps pushing up, if they don't want to just take profits right out the gates, right, and then hit the 200, I assume that would be resistance. You can see right here how it's support and everything. Again, it hadn't even touched it on the bottom yet. But if you come up over here, you'll see it resistance, 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 resistance. See? So it is resistance. Now, understand, this is what I was talking about. Why has the IWM been so bad? This is the Magnificent Seven divided by the IWM. And you can see there were times during 2020, 2022, where, when this is going down, that means IWM is outdoing the Mag 7. The reason why it started going like this, straight up like a cliff right there, is because all the money started flowing into the Magnificent Seven, and that became the market. All right, we've never seen that really in any other time. I mean, right there, I guess you can call it, but I mean, that one to the right, that is just insane. How much they beat IWM down because, the big money, again, that's what matters, not retail, was just pushing and pushing and pushing the 7 stocks up, right? And we showed it many times, so I'm not going to talk about that one again. But today was all about rate sensitive sectors. Okay, now going to some other stocks had big days, right? The other Max 7 was okay, but Tesla was the leader. Remember, it's been lagging, right? It's been lagging this whole rally. All of a sudden, like we said, if it gets up in that volume gap, boom, it's going to rocket. Why? Because call volume was just flowing today. Market makers were scrambling. They got to sit there and try to hedge. That means you got to buy the stock. So it was just roaring, right? Got up in that gap, got about a little bit over half the gap filled right there, as you can see. And so again, I'm going to take that trend line away because I don't think we're coming back down there anytime soon. And so if the momentum continues, I mean, you can see the resistance up ahead, right? It's going to be around 242-ish, 245-ish right there. It's going to be the next target and stuff. And as we kind of scroll out and get a chance to see, you can see what I'm talking about. But again, this is the area it loves to trade in. It's been here for years, but you can see that's definitely going to be resistance coming up. I know a lot of people were selling cash secured puts on their shares and stuff around the 280, 300 range because as the stock goes up, the calls get even more valuable. And they expect, because of a big move up, 245 is kind of your target. They don't expect it nowhere near it's going to get to 280, 300. So it's kind of free money for them and stuff. So just kind of, keep that in mind when people are doing that. But you can see here's the moving averages, right? The 50 is right at the top of that gap right there. It's going to get filled. And then the 100. And you can see it has respected some of its moving averages. Plus you got that trend line up right there as well, which will keep that there because that will be resistance now going forward. But again, big day for Tesla and stuff. Semiconductors, which Michael Burry just shorted, by the way, or supposedly in his latest portfolio, he just shorted the semiconductors. And interesting because we are in a strong seasonality for semiconductors, as you've seen, but maybe I think he's betting on NVIDIA earnings. I think that's what he's trying to bet against or whatever. It could be the case, but you can see SMH, what is it at? All-time highs right there. Why? Because you got NVIDIA just roaring. Here's AMD. I'm still waiting for this one to get to that trend line around 123, 124. I want to see if that's where we get the rejection. That would give us the third touch on this. And usually, especially with this kind of move it's had, you can see that happen. But again, semiconductors are going to go as NVIDIA does. If it craps the bed, then the whole semiconductor sector is going to be going down real fast. But I mean, is that going to happen? Can they not fudge their numbers enough like, most companies can? I think they can probably. We'll see. That's going to be the most interesting one to watch. Lastly here, Amazon. As you can see, I'm going to take that trend line away. We talked about this one. It's got to get above that dotted line. That's where it rejected twice. Okay, and I thought we were going to get above it. There, we peaked above it and then sold back down. I believe we closed right at this line when I'm going to zoom in. But you can see, I mean, it's above all its moving averages. If it gets above that line, you can bet money. You see that volume gap? It's just going to keep flying through that volume gap to get to around like probably 52 maybe. And so, when we zoom in here, you can see what happened was it got above the line and then sold back off to come right down below it. I found that kind of suspicious today, but maybe we get continuation tomorrow. Again, this has been another one, a big move, which Amazon just doesn't move like this normally. And so it's moving more like a Tesla or maybe even like a Meta really is what it's moving like now. So we'll see if that continues. Now, earnings tomorrow, again, you're going to get a lot of people going along on Target. You're going to get TGX. A lot of retailers are going to come out. And then you'll have Palo Alto, Cisco coming out as well. And after hours, economic data, all people are going to care about is core PPI month over month and year over year. They're expecting that to drop. You would think a CPI did, that would too. And then you'll have PPI, regular PPI year over year and month over month as well. And then you're going to have the retail sales, which, if this comes in under, okay, and it means we're getting weaker, that's actually good news for a soft landing. Okay? It means the Fed, if it's coming in like we're getting weak as consumers, that means the Fed won't have to raise anymore because their rate hikes are doing their job. And again, you have a whole lot more data nobody's going to care about. Now, right here, what I was talking about in the beginning, you can see VIX expiration, right? The calendar. This is tomorrow. I went through here and I just wrote on here real quickly, or it took me a while actually, but what's happened in the 2023 year here when VIX options expire. Again, this is tomorrow. We don't know what's going to happen tomorrow, but you can see out of 10 times here, we've had 8 go negative, 1 go positive, and 1 go flat. And so, because to me, it kind of frees the VIX up, right? Instead of having it suppressed, it actually frees up by getting rid of all these options and kind of starting it over for it to move freely. The number beside it, by the way, if you don't look at the top, it says 2 days, 16 days, 2 days, 4 days, 2 days. This is how long it either went negative, positive, whatever it is, before it had a different kind of move. And so I wrote this on here for you. Feel free to pause. Doesn't mean we're going red tomorrow. It just means when you look at it, September, October, we were -5, -4%. You go up and we were moving up. We were moving up like January through March. It was negative. We had a big rally going from May to July. It was like +2%, -1%, and then 0%. So it don't mean any of that, right? Especially now that you might have positive data come out tomorrow or whatever. But if sales come in hot as fire and we're just spinning, we got to see how the market's going to react to it, right? Because all it's going to do is just use an excuse skill one way or the other. If it wants to keep going higher, it's going to say, oh, that's great. The people out there buying, the consumer is still strong. And then if it comes out super soft, like really under what they thought it was going to be, they'll go, this is great. And they want to keep the market going higher. This means a soft landing, right? Or they can just reverse and say, we want to take profits. Oh, it's horrible. Did you see what the retail data came out at? You know, it's just an excuse to do whatever they want to do, right? That's all it is, okay? And so, again, you know, I just want to put that out there to you. Again, a day to learn, a day to like to look at your portfolio, all that good stuff. And so, you know, enjoy it. We'll see what tomorrow brings and stuff, all right? Let me know in the comments what you think is going to happen from here. And don't forget, we got OPEX, of course, and for the rest of the week, right? It's been a huge move up. Do you think we finally need some consolidating or something? Maybe a little accumulation or something? You know, we'll find out. So anyway, hope you guys got some out of it. Hit that like and subscribe button. I really appreciate you guys and all your support, and I'll see you tomorrow.